guys, let's see the first pattern. First pattern is double bottom. Okay, in this it will visually appears like this. The price will come like this and then like this. Here you should buy. Here stop loss, and this point will be the target. This is bullish scenario. Okay, I hope you understand very well about the double bottom. The appearance of the chart should be like this, should be like a W symbol. Okay, this is called double bottom. I hope you understand. Let's go for second. Okay, let's see now. Let's see the bearish. We call it as double top. Double top is also similar to like this. To form inverse W symbol, you have to short here. This will be the stop loss and this will be the target. Okay, it will like inverse W symbol. This is called double top, and this is a bearish scenario. I hope you understand about double top and double bottom. These two patterns always appears in the chart, guys. You should observe carefully and take the trades. Okay, I hope you understand these both. Let's go for another one. Let's see third pattern. Third pattern is inverse head and shoulder. Okay, this will appear like this. Exactly, if it crosses here, you should take buy. This will be the stop loss, this will be the target. Why we call it as head and shoulder is, if you see here, it is like head and these both are like shoulders. That's why we call this as head and shoulder. Okay, I will post a screenshots of the charts also in the end of the video. First listen the classes. Okay, this is called inverse head and shoulders. This is bullish scenario. I hope you understand this. Okay, let's go for another. Similarly, there is another same pattern, head and shoulders only, but this is for bearish scenario. For bearish, it will be similar to like this, inverse like this. You have to take buy orders, buy position here stop loss, here the target. Majority of the times it will form head and shoulders or a flag pattern or a double bottom. These are the most important patterns, guys. You will always see these patterns in the charts frequently. Okay, this is for bearish scenario and this is head and shoulders. I think now you got to understand how the visually it appears in the chart, head and shoulder patterns. Okay, let's go for another. Let's see the fifth pattern. Fifth pattern is falling wedge. This is for bullish. Okay, it is like price will fall like this. Okay, then it breaks here. That means it is breaking the trend. Okay, it is breaking the trend, downtrend, and it is moving upwards. This is called falling wedge. Here, this could be the target, or this could be the target. This is the target, and this is the buy. Okay, and below this point, we can keep stop loss. This is called falling wedge pattern. This is also one of the most important, guys. In many meme coins, we can observe these type of charts, because meme coins falls frequently, right? So when it falls, it forms in falling wedge patterns. Let's go for another one. Sixth one is rising wedge. Same. Rising wedge means it is for bearish. Whenever I say bearish, you have to take short positions. Okay, it goes like this. It breaks the upper trend, so we have to take here. This could be the target, and this could be the SL. This is called rising wedge pattern. Okay, I hope you understand wedge patterns, right? Now let's go for another one. So up to here, I have said 3 things. One is double top and bottom. Second one is wedge patterns. Third one is head and shoulders, right? These all we can call it as reversal chart patterns. Okay, let's go for another one. Let's see continuation chart patterns. Okay, first one is bullish flag. This is one of my favorite and sure shot profit pattern, guys. Whenever it forms bullish flag, you can definitely trade trades. You can sure shotly take profits. It is like simple. It is like this. Similarly, it will visually appears like a flag. Whenever it breaks, you can take buy position here, and the target will be this one. This size we can take here, and we can keep the target here, and this can be the stop loss. This is one of the most bullish pattern, guys, because I have traded so many trades. I taken out so much profit. Similar way, we can see bearish flag also. Bearish flag means similarly, but in a reverse manner. It is like this. Whenever it breaks, we can short. This is the stop loss, and this size we can consider here, and this will be the target. Okay, I hope you understand this. It is bullish rectangle. Okay, this is also frequently you can see in the charts when you are trading, guys. This is very simple. Market comes like this, and it forms like this. When it breaks this trend, here you have to buy, here you have to keep the target. This is the stop loss. This is the target you have to take, the size of this channel. Okay, This you have to keep the target here. This is bullish rectangle. I hope you understand. Similarly, we can see bearish rectangle. This is also simple. It comes and forms like this. This is the buy, this is the stop loss, and this is the target. The size of the target should be the channel size. Okay, this is the target size. Okay, this is bearish. These rectangle patterns also you similarly these patterns you can find frequently in all the charts. Okay, whenever the market is in sideways, you can find these types of charts. So this is about bearish and bullish rectangle patterns. Let's go for another one. Let's see another one, guys. This is bullish pennant. It is like this. It is like this. Here you have to buy. This is the stop loss, and this point will be the target. Here if you observe here the stop loss is very less. So always bullish pennants are very important for trading. This is the bullish pennant. We will call it as bullish pennant. Let's go for another one. Similar one. Twelfth one is bearish pennant. Similarly, bearish pennant. Same scenario. It is like similarly it will like this. From upside it will come down. You have to short here. This is the target. This is the stop loss. Here also very less stop loss. Okay, this is about pennants. Hope you understand about these pennants. Now let's see neutral chart patterns. Let's see the neutral chart patterns. First one is ascending triangle. Very important, guys. These chart patterns are very much important. It will be like the price will move like this. This is called ascending triangle. Ascending triangle. Here also you can take entry. If it comes down, you have to take entry here. If it breaks up, you can take entry here. And the stop loss would be, this is the channel range. This is the stop loss for entry of this, and this is the stop loss for. This is the size of stop loss you have to maintain. Okay. Similarly, descending triangle also same. Descending triangle pattern. Same like this. Here on entry point, here also on entry point. This range will be the target. Okay, this is called descending triangle pattern. I hope you understand ascending and descending triangle. And another one is, let me erase this. Last and final one is symmetric triangle. symmetrical triangle pattern. It is like this. Price will move like this, either upwards or downwards. Here the entry points. This size will be the target. Okay. This is about chart patterns. Let's see the recap of what we have discussed here. All chart patterns, I will explain what we have done. Recap. One is reversal patterns. Second one is continuation patterns. Third one is neutral patterns. Neutral patterns. Okay. In reversal, we have discussed about double bottom, double top, and we have discussed about head and shoulders. In continuation patterns, we discussed about flag patterns and rectangle patterns, and also pennants. In neutral, we have discussed about triangle patterns, that is ascending, descending, and then symmetric. This is all about charts. These are the most important chart, guys. Frequently you can observe in the charts. I hope you understand with these classes, and I will explain in the further videos with the real charts. Okay, thanks for watching.